Three, two, one. Ali from Blockchain Founders Fund. Great to have you today on Crypto Grownups.
Thanks so much for having me on the show.
And you mentioned you're heading over to Vegas now. There's a conference there?
Yeah, so one of the largest, or actually the largest InsurTech conference in the world is happening in Vegas next week. And so one of our companies, a company called Jaunton, just launched the lowest cost health insurance in the United States. It is not a blockchain company, but it has some potential plans in the long run where blockchain could make sense. But they're focused on, as a tech company, enabling micro insurance. And so for $15 a month, you can get unlimited telemedicine and unlimited prescriptions for basically the whole family, which is a game-changing product for the US market.
Now, would that cover my minimum requirement for being insured in the States?
So it depends on kind of what sorts of minimum requirements you're looking at. So like, for example, like education, like different schools, like different universities may have different minimum requirements, different sorts of workplaces that have different requirements. But of course, there's a massive group of small business owners, entrepreneurs, freelancer, let's say Uber drivers, all of these people, this is a product that would, completely change their lives, in my opinion.
Wow. No, I don't get me started on insurance, man. So like hearing that
in a lot of countries, it's a mess. I mean, especially in the US, but in a lot of places.
But even like, so I'm a US citizen, but I'm living abroad. It's a headache, and even when I was living in the US, it was a headache. Ever since, if you're not employed by, somebody else, if you're self-employed, it's just a headache. Now, you mentioned that you see that there is some sort of connection eventually with blockchain. Where do you think that coincides? Is that more on the identification side? Is that a insurance smart contract? Where do you think InsurTech and blockchain are first going to kind of interact?
Yeah, it's an interesting one, right? And so with Johnson themselves, I mean, they've looked at it. It's not the right time right now. But I think the insurance industry in general pairing with blockchain makes a lot of sense, right? So if you think about like claims and fraud, there's definitely some interesting things that you can start doing on the claims process. I think one of the other, there's different ways that are always connects, right? So think about this whole movement for owning your own data. You're seeing all the stuff happening with Facebook, you're seeing GDPR. So that's an interesting one, right? Because think about even, potentially systems where you can give access to your data to insurance companies to lower your premiums. Like think about your mortgage premiums, or like mortgage insurance, think about your health insurance or life insurance. Like by being able to share that access to your lifestyle and your own personal data, this could actually lower your premium. So this is like an interesting one that's maybe not directly InsurTech, but it lowers the insurance premium. So it has an effect on the insurance industry. And that's all about just getting more information. If you think about smart contracts, I think there's a lot of use cases for a lot of these small payments, recurring payments, quick payments. If you think about when you take a photo of an insurance receipt, like a dental receipt, right? You go to the dentist, you take a photo and you claim it to your insurance company. I mean, computer vision already is good enough to analyze these receipts.
Right.
And so you can already match this to the claim, see if it's valid, and have an auto payout based on some sort of, essentially some sort of smart contracts. I mean, there's other ways to do it as well, but there is interesting ways to make these micro payments instantly. And that would obviously be off of a stable coin or something like that, which would be potentially even central bank backed. But there's interesting things I think that can evolve over a longer period. I think we're definitely not there yet. These are things that we look at, 5, 10, 15, 20 years, but that's the amount of time it takes for these larger transformational shifts that, I think we're starting to see.
And does this fall under the Blockchain Founders Fund, this investment with Jaunton?
Yeah, so Jaunton falls under, so Blockchain Founders Fund does both direct investments, and then we've got, we're actually LPs as well on Loyal VC. And so those are kind of where both of our investments go out of.
Now, I'm sure you've noticed that there's been a huge, alt season is back.
I'm not so sure I'd say that yet, but
Yeah,
go on.
yeah. So a lot of people that know me know that I don't believe in most any altcoins, and definitely not alt season coming back. I think a high Bitcoin dominance is healthy for the crypto market in general. I consider that almost like a thermometer. Um, but that being said, I'm sure that some of the action has impacted either some of your previous investments, or is helping adjust your strategy in the short term. What's the impact been for the fund?
Yeah, so I mean, actually, a lot of our investments, especially over, I would say, the last almost 2 years, a little bit less than 2 years, have actually been more so on the blockchain side, and we've actually had a lot of our companies that even in late 2017, early 2018, that were thinking about doing coins, we actually came out, and we've had some public statements and things like that about, there was problems with that whole kind of altcoin run and the ICO run and all of that. And so we knew there was problems with that system. And so we actually got a lot of our companies to scrap the token aspects and to actually focus on
Well
running
done.
their business. And so, we actually got some flack for this. A lot of people thought it was a little crazy. I've had people tell me, in 2 years, 3 years, everyone's going to have their own coin, and you're going to be using 10,000 coins a day. I'm like, this doesn't make sense to me. This sounds so complicated, right? And so,
Well, they used to say the same thing about the internet, that back when TCP/IP was competing against all these other protocols, that there was going to be like dedicated internets, right? Like, oh, this is the internet for shopping, this is the internet for reading. It's like, what, then I need a different browser or like a different dial-up? You're gonna have to use the Verizon for reading, and then the AT&T for shopping. Yeah,
it's
massively
I mean,
complicated.
and so I do think that's pretty complicated. I mean, I am a big fan of some altcoins. Like, for example, I mean, if you call Ethereum an altcoin, I mean, obviously they add a lot of value. It's very different from Bitcoin. So there's like, it's serving a different market in reality, right? And so, like, we're pretty bullish still on that. Obviously, when you look at payments, there's a lot of interesting things happening. I think it's still early for payments, but you're starting to see, for example, with Bitcoin Cash, there's really interesting adoption. I've seen some of their new products, which look great. You're seeing the same thing with Dash, with adoption coming out of Venezuela and other places. I actually was on a call with one of our portfolio companies maybe last week, and the CEO was in Venezuela, actually. And she was just like, the adoption for Dash is amazing here. And I was like, hey, that's pretty cool. Cause like, you see a lot of this on, on the news, on Twitter, et cetera. But, you're always skeptical, obviously, on like how much is really the adoption. She's just like, it's accepted all over. And I thought that was pretty interesting. And so, things like this, I think, will have an interesting impact. I mean, there's here in Asia, I'm in Singapore right now. We have a portfolio company called Rapids working on mass adoption of crypto, and they've now launched, the ability to use crypto to top up mobile phones. You can buy crypto with credit card, which is great. You can buy Grab credits now, like, so the Uber kind of equivalent here. And I think these will start to gain some sort of traction. Obviously, a lot of people buy crypto to hold, though. But I think it creates a lot more usability, and I think it creates a lot more utility for coins to, ideally have that spending function. And we'll kind of see how that evolves, because I do think it's pretty early, but we see some potential with some of these being able to evolve into more usable tokens, I would say.
Now, and do you think is the adoption one of your main investment criteria, like looking at that's actually being used?
So what, like I mentioned, a lot of our companies don't actually have a token. We look at a lot of blockchain adoption, but not necessarily, like, a lot of our companies might be B2B. I think we're probably around like 70% actually on the B2B side. And so the B2B side, I think it's very different, but you're looking at blockchain use cases within businesses to create value. So, and then you've got the other side. So, for example, I mean, an example of that, let's see, Keyless, that's a recent one. So Keyless is a company working on simplifying the entire multi-factor authentication and actually getting rid of passwords, right? The idea is that it's all facial recognition based or other sorts of biometrics, but also using not only facial recognition, but also using your device. So it's almost like having two different sorts of security systems combined, which is interesting.
So Keyless is one of your B2B
correct
investments. Now,
correct.
Just so I can wrap up the chapter where you mentioned Ethereum, Bitcoin Cash, and Dash.
And those are just some. Yeah.
Are those part of your fund? Like you've got a position in them, or is that just some of your insight into crypto adoption?
I mean, on the crypto side, I mean, we hold a lot of different cryptos, so those would all be in our portfolio. But I mean, I would say that's also, I think, a comment on kind of what we're seeing more broadly, right? Because we obviously are looking at, investing in things that, we see as trends or where we see potential for upside.
Yeah, what's refreshing is, Dash has not been mentioned a lot on my interview series, and the fact that you've got this insight of its use in Venezuela, I want to kind of dive into that a bit more. If that's something that, I mean, do you think that's a trend we're going to see outside of Venezuela? Is it unique to Venezuela?
Yeah, so I mean, this is actually really interesting. So I mean, I'm going to step back actually and say so we're actually working on one of the flagship reports for the United Nations, and we're actually looking at, how not only blockchain, but crypto and other emerging technologies can actually help to alleviate poverty and achieve the UN Sustainable Development Goals. And if you look at, now going back to Dash, if you look at what's happening in Venezuela, there's obviously a lot of instability with the government. And so when a lot of people say crypto is very volatile, well, it's all a relative term.
Right.
And so in Venezuela, actually crypto is not really that volatile, right? Because everything's about relativity, right? And so I think that's one of the mistakes that maybe a lot of people make when they say, hey, crypto is very volatile. It's the context of assuming that you're in a developed country with a stable central bank, right? And so there's a lot of assumptions that we take for granted. And so if you take that same thing and you start applying it to a lot of other countries that are unstable, they might have a coup with their government, their central banks might start printing more. Obviously, you're starting to see what's happening in the US with, additional kind of, additional QE, you can call it, or additional kind of involvement from the central bank.
No, QE is great.
Right? So, I mean, this is obviously going to also shake up. So when the US does QE, it actually impacts emerging markets very heavily. Mark Carney talked a lot about this, the Central Bank of England. And so, this causes a lot of ripple effects. It's going to impact a lot of even more developing nations that rely on the US dollar more. And so you're probably going to start seeing more instability. But where you start seeing the real instability that probably matches cryptos or exceeds crypto is where you've got these very unstable governments like Venezuela. And so I think that's a start, but I think we're going to start seeing more and more countries that are highly unstable, where people can just start accepting crypto because it's getting easier to accept crypto, right? I was looking at a few different apps that are mobile wallets, and if you start seeing how simple they are, I mean, to actually send money to each other, to call money as a merchant, you can say, hey, the person owes me $5, and they just scan you and you can pay them, right?
Yeah.
And this is very similar like WeChat or Alipay in China. And that simplicity, I think, is going to make a big difference in these countries where they've all got smartphones pretty much. If you look at smartphone penetration, it's very strong even in developing countries. And internet, actually 3G in a lot of these countries is still pretty good. And so you can actually, for very little infrastructure or no infrastructure, start accepting crypto, where your currency itself is not a good solution. And how do you take other currencies? Like, you can't actually take US dollars, or you can't actually take these other currencies because people might not have them. And then they usually don't have a way to actually transfer them that easily in these countries. So this is where I think crypto could have a really interesting impact. We're also, on the UN side, we're actually exploring crypto being used in things like refugee camps. We're looking at We're looking at what special economic zones. We're looking at trade-based currencies, regional-based currencies, central bank-based currencies, or synthetic hegemonic currencies, as some people are calling it. So we're exploring all of these really interesting areas, and yeah, it's fascinating to see kind of how it evolves, either on a consumer-driven demand side, or whether it'll come from a central bank perspective.
Yeah, what are the characteristics that matter? Like for Dash's example in Venezuela, I'm guessing that it's just they happened to have distribution of the coin there earlier than other coins. And usually there's this, philosophy about network effects. Whoever gets in there first becomes the dominant player. There's no oxygen for another coin to easily come in unless it has, coin or product, whatever you want to call them, unless it has massively superior characteristics where it can, kick it out of the food chain. Is that really what happened for Dash to be adopted in Venezuela? Is it that it was distributed there and accessible first, or are there certain characteristics that make Dash the currency of choice there?
Yeah, I mean that's an interesting one. I mean, I don't know all of the background on Dash, but from what I've seen, I know they have a really strong focus on South America. I mean, there is a team focused on LATAM, and that has been probably a big part of how they've started to create adoption across Venezuela. We've heard them focusing on Brazil and other parts as well. And so I think that just having that presence, I know they had a merchant strategy. If I'm not mistaken, they had some sort of incentive for merchants to start accepting Dash. And I think these things are good. I mean, I don't have a problem with that. I think you see that with traditional businesses all the time, right? There's always incentives to.
And Bitcoin Cash has been very similar too in focusing on merchant adoption. So, on the UN side, because the work you're doing with the UN, I mean, that's awesome. I wish, I had that opportunity, because that you're making a difference, right? You're helping explain to these larger organizations, hey, this is what this technology is. You're introducing it and you're helping steward it. What are the characteristics that matter for a currency in a refugee situation? Is it, does privacy matter? Does it matter if they're a political refugee versus one from a environmental issue? Or is it more about how fast transactions can happen? What's the characteristic set that would help, a coin kind of be adopted there?
Yeah, so it's an interesting question, right? So the way that we're looking at it is maybe a little bit different, right? But because this is still pretty early, I would say, in the way that people have looked at refugee camps, right? A lot of the times they haven't actually looked at creating essentially some sort of economy within. And so you get these natural economies that'll start to form. It's very similar, I guess, as an example, to prisons. I mean, you've probably heard the stories of cigarettes or ramen being used in a prison setting because there's no alternative, right? And that's actually inefficient. If you think about, having a barter system versus actually a currency-based system, right? We know that's inefficient just from historical context. And so with the refugee camps, there is essentially an effort to look at, can we start creating a localized kind of closed currency that can be used within that to start creating essentially an economy and give more purpose and have create more value, essentially, where people can leverage their skills, do something a lot, then they can trade, the currency that they're making for something else, right? Because they can buy goods, etc. So it would create this more organic sort of community in there. I think it's interesting on the privacy front, right? So I think Christine Lagarde's a really, amazing and fascinating leader, and I've actually met her in China over a year ago. But one of the fascinating things she talks about when she talks about the adoption of crypto and blockchain is she talks about the need for a private layer and a public potentially layer, or at least a layer where the government can't see, or whoever the authority is can't see what you're doing. And there's very key reasons for this, right? you're already starting to see in a lot of places governments, interested and potentially judging you on the way that you're spending or on what you're doing, right? I mean, you might have heard of like social credit in China, and that has an interesting impact. And I don't think they're the only country necessarily looking at that or some form of that, right? I mean, essentially everyone's analyzed on spending in some sort of way. I mean, that's why there's financial credit systems, right? And so it's going to be really interesting to see how that evolves, but there is going to be a need probably for something to be private, or at least that you can mask, and then something that maybe has a bit more transparency. And so it'll be definitely an interesting way to see how this actually evolves in practice versus theory, but we're looking at some interesting areas here.
Yeah, and moving away from the barter system is the reason why we created money in the first
Exactly.
place, right? Because of those massive inefficiencies. Recently, changing topic to some new stuff in the news. Coinbase had a slew of listings they're looking at.
Yeah.
A lot of people are speculating that they're finally having to succumb to pressure of the way Binance kind of operates. What's your take on that? Is this a good thing that they're opening up to more altcoins because there's a maturing of these projects, or is this more of a business decision like, hey, we need to?
Yeah, I think there's a couple of things here, right? So, and I think it's maybe a little bit more complex to unpack than people might see on the surface. And so, if you look at Coinbase, like one of the things is they need to continue to find growth. It's similar with any company that starts to obviously slow down in certain ways, because they've been on this rocket ship, grew to this unicorn valuation. How do you find more growth? You have more investors come in, you need to find more growth. And so, altcoins are one of those that'll find more growth, right? There generally can be, potentially higher margin even for an exchange, right? So some of them might have like higher trading fees on different coins or things like that.
Right.
But altcoins is definitely one of those. And I think the other part, if you think about the way that exchanges use coin listings, is actually to bring new users to their exchange. And a lot of people don't realize this, right? Because they get the companies or projects to actually heavily promote their exchange. And so they're able to bring over individuals to ideally open an account on Coinbase. So if you now think about cost of user acquisition, which is what the exchange is thinking about, it actually is a very low cost of user acquisition, because you essentially have these companies and all this free press that are going to be pushing people to sign up now on your exchange. So from that perspective, I think it's pretty interesting. The other part that I think is interesting to look at is Binance has obviously opened up Binance US. And so now that, Binance is coming to play on Coinbase's territory, Coinbase should probably look at whether or not they want to start pushing back on another front, right? Which is going to be expanding in the altcoin side. So I think that there's a few different kind of things at play that maybe a lot of people haven't unpacked and that maybe are a little bit below the surface, but those are kind of the ways that we're looking at it. Obviously, from a regulatory perspective, it'll be interesting, right? Because there's probably higher risk in some ways to Coinbase, given how, I guess, stringent from a regulatory perspective it's been there.
Yeah, and there's going to be certain jurisdictions you still won't be able to access these coins. Like if you're a New York resident, you definitely won't be able to touch any of that.
Yeah.
Now, customer acquisition for exchanges is obviously getting harder. OKCoin just had a promotion to donate. I think it was 0.02 Bitcoin per person who registers on the website, and they would donate up to 1,000 Bitcoin to the developers. 6 of the developers for Bitcoin Core, a few of the developers for Bitcoin Cash, and for BSV as well. I think there's only been like 40 people to sign up.
Wow. Okay.
Last like 20 days.
Wow. Okay. I haven't been aware of that. And I mean, I knew of the promotion. I didn't know there was
Yeah.
only so little signups. I mean, that's definitely surprising. I mean, I do think that they probably haven't done as good of a job of pushing or promoting that or letting people become aware of that. And so there's probably some strategies that they're lacking on that front. I mean, I also know, I mean, Bitcoin.com launched their exchange and with negative trading fees. I think we saw another exchange look at doing something similar, negative trading fees. I think I saw that somewhere else as well. But I think that it's definitely getting more competitive. But I think those sorts of promotions like the negative trading fees were pretty interesting. I mean, I signed up, and I think it's an interesting promotion that I mean, why not? I guess if it's negative trading fees, I mean, I'll open an account, and I think a lot of people probably are as well.
Yeah, for the Bitcoin.com, that what's interesting there is always this connection with Bitcoin Cash, and it's one of those things that can either hurt or like I doubt a Bitcoin maximalist is going to now open an account, even if there is negative, just because of the
Mm.
whatever negative connotations this creates, right? Um, it was an interesting move nonetheless. It obviously can bring more liquidity to Bitcoin.com. Obviously,
I think
Bitcoin.com is one of the first destinations for a lot of
yeah,
new people.
it is, and I think it's a trend, right? Like, so not only did Bitcoin.com open an exchange, but I think Blockchain.com did as
Right.
well, and you're starting to see still a lot more spot exchanges being open. And then obviously there's this whole trend on derivatives exchanges, which has been on a rocket ship, right? So you're still seeing quite a bit of this, but there's definitely an oversaturation of spot exchanges, like retail-based exchanges, and I mean, players like Bitcoin.com, Blockchain.com have obviously a natural advantage, given their kind of big firepower across their wallets and their ecosystems. But for these other ones that are launching, I mean, to me, it doesn't make sense, and I think you're going to start seeing a lot more closing, and you've already started seeing some closing, but I think it'll still be a lot more of these smaller exchanges getting pushed out of the market.
So closing and not consolidation. Like there's no point. Like unless
You'll see some consolidation, but probably doesn't even make that much sense for a lot of them because a lot of it's just wash trading on these smaller exchanges, and they actually don't have many organic users. I mean, the token is an example, right? You could go on their exchange. I got an email actually saying that they're the number one exchange in the world. Okay, I don't know. I could show you the email if you want, but like you go on there and there's zero volume on most coins, right? Like no one's trading on there. I don't actually have any friends that trade on that exchange, and so I'm like, where is this coming from, right? But like then you look at it and you're like, well, it makes sense. The way that they actually make money isn't by having traders; it's by selling IEOs and listings to people that don't know better and kind of taking advantage of them, right? So like that to me is obviously frustrating, and that's not good for the industry. But I mean, I guess that's just the way some people approach it, and so that's like a lot of smaller exchanges do sell these sorts of packages, but they might not really have actual traders. If they bought actual traders, I think they would be interesting acquisition targets for people.
now is this because there's just so many exchanges where if you look at traditional equity markets, they're heavily regulated. Are we going to eventually move into this heavily regulated space? Are we organically going to move into consolidated only like 5 or 6 exchanges because the cost of operating is going to be um, a barrier to entry? What do you think the trend's going to be 5 years from now?
Yeah, I mean that's an interesting question. I think it depends on the jurisdiction, right? So you're already seeing, for example, in the US, regulatory costs being quite high, big barrier to entry, even just off of that, right? Getting all those licenses, et cetera. So you're not really seeing many people going to the US, even though in reality that is the dominant place for capital globally, right? Like and like historically it has been. And so, a lot of people though are just deciding to skip that entire market and not operate there. I mean, they operate there on crypto to crypto sometimes and violate some rules, but most people are actually just banning U.S. users, right? Um, and so I think it depends because then you look at other jurisdictions and there's exchanges doing really well. Like I mean, Binance out of Malta Obviously, they're open. Like Malta, I don't expect to come extremely stringent on regulation. I mean, maybe they'll get some sort of pressure though from the EU at some point, but who knows, I think, right? But right now, I think you'll probably have this divergence of some countries going much stronger in regulation. You're seeing that out of Japan, for example. And that will probably hurt trading, hurt, growth in that area. But if you do have a license and you're regulated, you probably also have an advantage, right? Because now institutional is much more clear, retail is allowed, or however it's structured, but that, won't have many competitors. And so you'll be kind of the main place to go. And that probably means you can also charge higher fees, right? Like, I mean,
Yeah.
it's not going to be 0.1 or 0.05, maybe then it's 0.2 or 0.4, right? You even see this with exchanges that have figured out fiat. So, for example, the exchanges that figured out fiat in Singapore charge 1% on trading, right? That's a big number, but if you want to get to fiat, you pay it, right?
Yeah.
Even I think Binance Singapore, it's in a similar range. It's not that different.
That makes sense. I
When
mean,
you
they've got that gatekeeper effect, and then they're sticky because that's your first entrance from fiat.
Exactly.
It's justified.
So yeah, so I mean, it's justified, but I think it also does take away from one of the big benefits, right? Ideally, of being able to hold crypto and send crypto for cheap. If you think about, needing to send $200 home now, and you got to go and pay, more than 1% to buy, and then you're going to pay a couple percent on the other side, and then you probably have maybe some other fees, even of getting back to fiat on the other side. Like, you're starting to add up, and this maybe doesn't even make it that much more attractive than Western Union, right? Like, so it really depends on how the fees are stacked.
Right. But I mean, that's all like temporary, more so than these wire transfer fees, right? I mean, yeah, that's true. And I guess the only pressure against that is the existence of decentralized exchanges.
And so decentralized exchanges are interesting, right? I mean, I don't know if you've used one, but like, they're generally pretty clunky.
Yeah.
They're not that smooth of a user experience on pretty much any of them, to be honest. Like, I mean, innately it's more complicated, I would say, for the average person, right? And so that is something that needs to be worked out, and we'll see how much simpler they get. But decentralized exchanges can be interesting in the long run, I think. We'll see how it evolves, but I'm pretty excited to see a future where, you don't actually need to go through a centralized entity. You don't have that risk of like that counterparty risk, that hacking risk, ideally, and you can control it fully. And we'll see kind of how that evolves and what happens with decentralized exchanges over the next, few years. But I think it's still pretty early, and it's very clunky if you haven't tried one. It's worth trying it out for sure.
Yeah, I mean, I know that you also have to like choose. You want to be clever about the gas fees you're paying. That way,
Yeah.
it actually confirms when you're doing the trade. A lot of people don't think about that. That like you're still paying a fee, and now you have to decide what that fee is and guesstimate what the time of confirmation is going to be. Other than it's very obvious what the benefit of a decentralized exchange is, in that there's not going to be the KYC, there's not going to be the counterparty risk that you mentioned, the custodianship, right? Is somebody else holding your keys? But there's still going to be centralized exchanges, no? Or is that something that
I definitely think there will be. I think if you look at how society's evolved, I mean, people do want simplicity, right? I mean, when you go bank with your bank, you hold it and it's a centralized entity, and you don't worry about it, and it's reasonably simple. Obviously, everyone has frustrations with their bank, but like, it's pretty simple. Like, you could hold all that money under your mattress, but you don't, right? Because you trust the centralized entity, even though it's in the hands of another party in reality, right? And so I think you'll probably see some sorts of similarities, and you already do with the crypto space. So, for example, there will continue to be centralized exchanges. As it grows, you'll probably have more and more custodians that hold your money. A lot of high net worths that aren't in or family offices that aren't in crypto already. will probably just go through a custodian that holds it, right? And so they're relying on an additional third party to do that, even though they could do it themselves. But that's more likely the way to go. And I think a lot of the masses, it'll be similar ways. I mean, if you start seeing, I think there's now two major pensions in the U.S. holding Bitcoin, right? So if you think about how now technically all of those pensioners are holding Bitcoin, they're not holding it themselves, right? It's technically a custodian.
Yeah.
So that is now more common, right? And Korea was very similar. Actually, Korea was one of the first countries where the public pension started investing in Bitcoin. And so if you think about all the people that own Bitcoin, they don't actually own it themselves, right? They're holding it through a custodian. So that, in my opinion, will be the more common way, similar to a lot of other products out there. But I think it's, if you are not able to trust these institutions or have some concerns on it, I think you have the ability to hold it on your own, which is much better than I would say with stocks or other things. A lot of times you're actually buying it on a platform, and actually it's basically an IOU more or less with them, right?
Yeah, and it's great to have options. That's ultimately what's happening.
Exactly.
Is you on that spectrum before, if you wanted to hold on to more risk, you didn't have the option to. Now with decentralized exchanges, you can take on more of that risk, even though if it's a bulkier user experience. This is I love that there's obviously still so much to unpack around DeFi, and that's ultimately the use cases around the world, the social impact you mentioned with the UN. There's just so many ways we use our wealth and our store of value, the medium of exchange, that it's even though a lot of people see it as a small world, it's transformative. Recently, there's this question of the day, a group of friends and I have, and one of the most recent ones was, what is the single largest issue in the world right now? And I really think it's around financial freedoms. The ability to move, and this has only been opened up to my mind because of Bitcoin and blockchain.
So this to me is no, I agree with you, but this to me is a very frustrating topic, right? You've got 1.7 billion people that don't have bank accounts, or that are unbanked, don't have access to basic banking systems, right? And so this is a problem. They don't have access to credit. They don't have access to storing of their money, or opening a bank account. There's 1.1 billion people without identities, right? And so like these sorts of problems just bar out a massive part of the population, because basically the world says they're not good enough, or whatever you want to say, or they're not, they don't deserve it, or maybe some people are saying, well, they should have identities, but they don't, and we don't have a solution for it yet, right? And to me, it's pretty frustrating. I don't think that the system makes sense a lot of the times. If you think about KYC, AML, like they're great in a lot of instances, right? Like we obviously don't want, Bitcoin to be used for money laundering. Like, and at least that's my point, right? And if you even look at the data, fiat's used 800 times more than Bitcoin, right? But if you think about these rules and regulations, they don't think about that other billion people, right? And the fact that you don't have an identity, you can't get a bank account, you're cutting out over 1 billion people. Like there's a problem with some of these rules and the way that they're set up, even if they're from the purposes of, counterfinance terrorism, et cetera. And so this is where the decentralized finance movement, I think, can have a very big impact. But it's more complicated than most people think, right? Because to actually be able to get these currencies out to people and them to actually start creating an economy, it's a little bit like a chicken and egg problem, right? Because you need people accepting them, you need people using them, and if you don't have both at the same time, I mean, it's really hard to take off because people get frustrated, right? And so that's a problem. You look at credit cards and how simple they are, right? Like, I mean, in reality, like we all use credit cards, and you tap your credit card and in a split second you've paid, and the consumer has no fees in reality, right? I mean, there's obviously the merchant fees, which really gets passed on to you, but like to unseat this whole thing of 2-3% fees on every transaction is hard, because consumers actually don't see that fee.
Right. They don't take it on. They don't bear it.
And so it actually makes it much more difficult, I think, to create adoption as well. But I mean, there's some interesting things we're hearing of kind of in the works where maybe there's like a small fee on merchants, maybe gets passed back to the consumer, and some sort of system like that could
Even
be an
credit
interesting
cards
way.
though had to be
Have that,
airdropped in the
yeah.
beginning, right? I think it was like American Express was the first to ever do like something like an airdrop where they just gave like a whole state a credit card with some like prepaid amount on it or something. This is like,
Yeah, it's probably way back.
way back in the day, yeah.
So, but I mean, it's definitely interesting, and we're following, the decentralized finance movement very closely. Obviously, the lending side is interesting, especially if you can start getting credit and lending to people that need it the most. Obviously, a lot of it right now is used with like crypto lending, and I think some people are speculating or things like that. But it'll be interesting as that moves into more emerging markets and actually being able to get access to credit, like start a small business, etc. But there's a lot of regulatory aspects here that I think still come into play.
Ali, thank you so much for the time, man. I want to, before we go, I want to, pick your brain on what can somebody do to help this movement, with the work you're doing with the UN. How can they help, these 1.7 billion people? Is there a website they can read more and learn about? Is there somewhere they can donate, somewhere they can volunteer their time?
Yeah, I mean it's a good question. I mean, definitely read up on it. I think education is actually the biggest empowerment that you can have, right? And just knowing about it, talking to people about it, is important, and making people aware. Because I think a lot of us just don't realize like how big of a problem this is. And then I would say the other parts. I mean, I'm a big proponent of private enterprise creating solutions, and so just be aware of like interesting companies that are trying to work on these solutions. I mean, there's really cool companies working on identity solutions. There's really cool companies working on other sorts of solutions with credit registries, or being able to create some sort of systems to track credit and things like that. And so, just become aware of these companies. If they're interesting, maybe like promote them or let people know about them. If there's ways that you can help those companies, I think that's good. But ideally, this is the sort of thing that'll, be able to transcend these intergovernmental organizations or these governments, and it's going to come from probably some sorts of private enterprise. It needs to make sense financially for companies to actually be able to proliferate solutions all around the world or across emerging markets. And so that, I think, from everything that I've seen, is probably the best way of actually creating this sort of adoption.
Yeah, so the best thing we all can do is spread the word, keep their customer acquisition costs low, try to connect the dots between different companies, and, just keep doing exactly what you're doing. You're obviously a prolific speaker. You speak at so many conferences. So, thank you so much for spreading the word. You're a great ambassador.
My pleasure. Thank you.
And again, thank you for your time, man. This was excellent. Thank you so much.
Absolutely. Thanks so much for having me on.
Take care, brother.